Welcome back. My next guest, he lays it out pretty simply, if you ask me. He says that if investors would take a step backward and fast forward to, say, August, the big picture, right? That's what he's talking about. Here's what he thinks could happen, right? A China deal, that gets done. How about the big, beautiful bill? That gets passed. We're going to get some tax cuts in that. Deregulation. And, oh, by the way, the Fed looks like they're maybe warming up to some rate cuts here. So these 5 things, he says, are going to lead to one of the hottest markets of our time. Now, it's a great time to be bullish because many out there continue to doubt it. I felt this way. A lot of folks have hated this rally since April the 8th. And he's hard to argue with on this. In fact, I tend to agree with him pretty much up and down his research notes. Arguably, he left off one big thing, though, the tremendous success that President Trump's had over the last 4 days. That, too, will lead to a feel-good factor, right? America first, America's back, those kind of things, animal spirits. I'd say that's already happening in the market even right now, today. Now, the road ahead, it's not going to be smooth, but I agree with our next guest that road will lead from the lower left to the upper right, if you get my drift. Please welcome to the show, Mr. Eddie Ghabour. Eddie, thanks for coming on. Appreciate your time. He comes to us as the co-founder and key advisor of the Key Advisor, the Advisors Group. Sorry. All right. Great notes. I totally agree with you. I had to actually, because sometimes I can be a Debbie Downer, and I was on Varney this morning and he was shocked that I was saying the things I was saying, and basically was parroting a lot of what you had to say. There's so many good things out there, and we've made it through a lot of the bad things already. I just feel like things are set up to do pretty well.
I couldn't agree more. And look, when you see so much good stuff, right, as risk managers, you get a little paranoid. You're like, what am I missing something? Right. Because things look so good, right? And that's our job as fiduciaries, is to make sure we're open to all outcomes. But at the end of the day, I think a couple of things that's going to allow this market to go higher than many people think, because it's like when markets are going up, they can go much higher than what you think is, and it works in both directions on the downside. But there's a tremendous amount of liquidity that's going to hit the marketplace, and that's not even in the economy yet. And another thing that I'll flag that we're seeing is on the bank lending side. We are seeing lending accelerate. So you add that to the tax cuts, you add that to the excess government spending that we're going to get, the deregulation, look what's happening with oil prices. Not to mention, this is probably the most hated bull market I have seen in my career. That pessimism is going to continue to drive things up. So dips are to be bought until this market tells us otherwise. The markets are smart, and they're telling us right now this is a risk-on rally like one we haven't seen in a while.
Yeah, and I can't help but repeat myself. We just talked about this in the last segment, but you're right. It's been one of the most hated rallies I've ever seen. I've been in the markets for 38 years. I'm going to be 39 is coming soon. I also haven't really seen a market. I mean, very few times, but this is one of I can count maybe 3 or 4 times that I've seen the market get caught so wrong-footed. I mean, again, if you do that analogy of say 10 o'clock Sunday morning, this last Sunday, if you would have been long oil and short equities, I probably would have spent that money before the market opened up that afternoon, right? And then I would have been broke because it just didn't work out. Everybody was long oil. Everybody was short equities. And when there wasn't enough news there to shoot that higher, give you more buyers in oil or more sellers in the equity market, everybody cannibalized themselves on the way out.
That's it. You have so many people that are bearish. They're being forced, but to your point, to have to buy. And this is why I think the dips are going to be shallow. And the other factor, too, is to show the strength of this market. The things that happened over the weekend and yesterday, traditionally you'd have seen at least a really bad open at the worst. And we didn't even have that.
Right.
So it's impressive. It's extremely impressive. And I'm glad that we're long.
Yeah, well, I mean, and it goes to show you that if we make it through those things again, I mean, I guess you could be a little suspicious about, well, maybe we won't get the bump out of those things that we talked about at the top of the show, but we're probably going to. We're going to get a bump out of the bill passing. We'll get some, Kevin Hassett was on earlier this morning. I saw that he said expect some announcement on trade deals around July 4th. So that's next week. I mean, there's going to be we're going to get a drip of bullish news, and we'll see how the market takes it. But if you're short, you're not going to get a lot of help to get that stuff back on board at lower prices, are you?
No, I mean, I think you have to get your head examined if you're short in this bull market. I mean, no disrespect to the shorts, but I mean, you have to admit when you're wrong. And the market, I've been wrong plenty of times. And you have to pivot when you're wrong, or you're going to lose money for your clients. And right now, to be bearish, I don't know what you have a leg to stand on, because right now, fundamentally, these headlines are one thing, but there's actually going to be fundamental changes with these bills when it passes, in the sense of extra money going into the system for
Yes.
liquidity. And that liquidity you can't fight it. It is powerful. It inflates asset prices. So at some point in time, the leg will drop and the markets will tank. But until then, we're not going to fight the tape, and we're going to continue to ride this until the fundamentals or technicals tell us otherwise.
And 20 seconds left. You know, you've mentioned it before, and I think you're right. There's a lot of money that needs to catch up, and they're going to be pressed to buy this market going into the last part of the year, correct?
Yes, I think you may get a little bit of a pullback when you get some headline risk if some deals don't get done within the timeline. If you're not in, I would buy the heck out of that dip, because that could be the last one before we get that final leg up that blows through new highs and then gets us to, I think we got 20% more to go over the next 12 months.
Oh, wow. Okay, awesome. That's all. Well, then we're definitely having you back on next week. Thank you very much for that. All right, Eddie, thanks for coming on. Eddie Ghabour.